Hey guys, this is a look at ES and ZB and how they're basically trading the exact same setup but mirror images of each other. And I just want to show how, I call it quick and dirty Elliott wave can help you recognize these setups and jump in the trend. On ES, it doesn't even matter whether you're long term bullish or bearish. This is the daily chart right here, and this was the low that actually bounced off of the 2020 highs to highs weekly extension. It doesn't matter if you think this is a 1 up and a 2 down and a 3 up, or whether you think this is an ABC and this is a bear market rally that's eventually going to roll over. It's about looking at the structure of this wave right here and whether that's going to be a 3 wave structure, which would mean it's obviously corrective, or whether it's going to extend in a 4 and 5 and leave open the question of whether it's counter trend or whether this is the trend. So, looking at just the hourly charts, um, again, this is the wave that I'm talking about, right? Wave C or wave 3, whichever. And this was the FOMC meeting, this wick right here. So this initial thrust off the bottom was a wave 1, and the FOMC front ran the long from lows. And so this is a 1 2, and then just counting this out real quick, it's a 1 2 1 2 3 4 3 4 uh, 1 2 3 4 5. So that's all a single wave. So it goes 1 2 3. And then the question is, if it rolls over from here with 3 waves, it's obviously corrective. So is it going to get a fourth and a fifth wave? Is this, this is obviously developed into 3 waves down, right? 1 2 3 4 5 ABC, 1 2 3 4 5. And actually, the trade I'm talking about developed here off of this low, this extension. And what I'm talking about is the extension, the fourth wave developing as an extension off the bottom of wave 1, or here, the top of wave 1. So the setup that's trading is an extension drawn off the top of wave 1 to highs, which has a fib level at 44.51. And we had developed, and here's the same setup in reverse. The wave 1 bottom, this wave 4 traded a lows to lows extension to create that fifth wave there. And so this was I got in it yesterday, and then I took some off, and then I got stopped out on the remainder overnight. And let's see how I can get in there closer. And so this was tough, right? 44.51, they came down to 44.5. So that is about a 6 point dip in, and it's a perfect double bottom. And it seems like the game they were playing was no hourly close below the highs to highs extension. And the reason this is such a tough trade is, even though you're looking for it, like I was, I didn't expect them to make a tick perfect double bottom here. My stop was somewhere below this 618 line. And as soon as they stopped me out, they ran 50 points in the opposite direction. So that's what makes ES so tough. Um, and so, now there's a legitimate target up at 4,700, more or less, with the 618 target up at new all-time highs. So the Bulls won this battle. There's another bearish scenario where this could subdivide instead of being instead of just going 1, 2, 3, 4, 5, they didn't get the continuation with the 4 and 5. The bulls saved it right here. It could still develop into a 1 2 1 2 as long as this makes a lower high relative to this one, and then a 3 down. So you do have to watch for resistance on the way up. But this was the setup that was trading yesterday and today. It's recognizing what the wave 1 high is, that first setup that traded, understanding that this was just a big third wave, a 3-wave fourth wave into a highs to highs extension. So what that looks like on ZB is, here we have the hourly chart right here. And, apparently we traded, they were using this high right here, or just prior resistance. Prior support zone is now resistance. But they had a reaction at this, at the 236 target here of this setup, which is why I think that's sort of the setup that traded. And we came out of, there was an initial 1 down and then a 2 up, and then we went 1 2 1 2 1 2 3 4 3 4, or something like that. The count's not exactly right. Obviously a third wave, right? 1 2 3, and then the wave 4 should develop as a lows to lows extension off the bottom of wave 1 right here. And ZB does this thing when it's in third waves. We saw it, well, I won't bring up the weekly chart, but we saw it on that aggressive third wave maybe 2 years ago, where it trades 38 twos of its lows to lows extension. And you can argue that this is either a 5-tick front run of the 50, or what I think is they were not allowing an hourly close above the 38.2 of the lows to lows extension. And that ran to and through its target, and it looks like they're trying to trade another lows to lows extension. But we have to watch for trend exhaustion here, because this is now a 1 2 3 4 5 waves down. So you have to identify what the initial 1 2 setup is. Look for that wave 1 low, and then look for wave 4 developing off the extension. And we see that on the weekly chart on ZB. I showed this in the previous video, where here is the bottom of wave 1, and this wave 4 traded as a lows to lows extension. So this works on all time frames. And in order to recognize this setup, you need just at least a loose handle on sort of the Elliott wave patterns. A wave 4 doesn't always develop as an extension. It frequently does. There are other ways it can happen, like some sort of measured move or different form of retracement. But I just want to point out that it happened on ZB and ES on the same day, just inverse of each other. And so, while I'm looking at ZB here, I'm considering this a 5th wave down. It looks like they're hell-bent for the bottom of the purple channel on the weekly log chart, which incidentally is not the same as a purple channel drawn on the linear chart, which I have here. On the linear chart, it's down at, if I just go straight down, it's down at 138. On the log chart, it is at 142. That's a 4-point difference. So traders who are working off this channel on the linear chart, you can draw this channel on the linear chart. It will never get here, right? I've seen this too many times where it's the weekly log scale channel that is the real setup. So So what I was saying was that I'm considering this a fifth wave down. This is just an absurd 14-point wave one. Because we had that squeeze around the contract rollover, and we had to sell off 10 points just to get back to where we started from. And so technically, I think this first wave should only be 4 points, from 150 to 146. But I think we have to respect that. And so what this means is, uh, quick and dirty Elliott wave in a 5-wave impulse, wave 3 cannot be the shortest. And so since wave 3 likely won't be longer than wave 1, wave 5 cannot be longer than wave 3. So what that means is, let's just say that it's going to bottom right here, that this is the bottom. It means that we have to measure this wave 3, and then wherever wave 5 starts from, let's say there's a retrace and it comes back to, I don't know, there. That gives us 100% parity where wave 5 would equal wave 3. So we just measure wave 3, drag it to the top of wave 5 whenever that happens, after wave 4 completes. And so if it's 139, that would give us, that would sort of line up with the bottom of the purple channel. And so I'm imagining a scenario where wave 3 gets long enough where wave 5 would hit parity, just spiking outside of the purple channel. So that would put a hard limit on how low wave 5 could go, and give you like 3 reasons to be a potential buyer down here. A complete 5-wave structure on all degrees of trend, the weekly log channel, the 618 target of the lows to lows extension, and what is apparently going to be a hard limit on how long wave 5 can get. So there's a stack of things lining up for a potential bottom over here, and I haven't looked at yield in a while. 30-year yield is not running to its target. It's chopping around this 618 line, which is, I will never understand the mathematics of bond price, yield, maturity, duration, and convexity, and the relation between price and yield. I would have thought that when price was getting down here, yield would be at its target, but now it seems almost more likely that when price gets down here, yield will be ready to, after having broken this series of measured move shorts on yield going back over a decade, yield will simply come halfway back long. Price will find a intermediate bottom here, and we'll have a situation where yields will fall as they start to hike rates. That seems like it could be the game plan this time. So there's a lot of things lining up down here, and I just wanted to point out that while I was talking about ZB. So you just need to observe the structure and watch for these wave 1 extensions trading lows to lows or highs to highs. That's the main point today. All right, thanks guys.